Well, if I think Mike kind of, as typically happens, nailed it. It was a little bit flushy. I was on last week with Sarah on Fast Money, and we talked about how when the market is up 25% in a calendar year, the history since 1980 suggests that it doesn't suggest every single time you've had down early pullback in the year by a median of 5.2%. So to what you guys have been talking about, you've gotten some of the tactical stuff really kind of washed out, and you've more than met that median drop. And it was this week's action that did that.
Tony, in terms of the sectors that you're more confident of buying at this point, is it very hard to differentiate when we're in a broad sell-off as we are, or are there certain sectors that you think now is the time to start putting money to work?
Well, if our call for the year is a plus or minus year, we put that out in our December 2022 outlook, and it's really concentrated. The first half is going to be this tumultuous activity. We have monetary and fiscal and economic uncertainty. It's going to get worse over the next couple of months. So we're going to have these periods of whooshes, and our idea is to take advantage of some of those. So to answer your question directly, if you do get a bounce back, at this point, I think it's only 6% of the S&P 500 is trading above their 10-day moving average. The 10-day rate of change on the VIX is, I think, 50. Those are two of our tactical indicators that suggest that the environment is ripe for a bounce. The bounce would have to be in those growth stocks that have been beaten down. Remember, that's been because of interest rates, how interest rates had spiked and expectations of Fed moves. A lot of that has been given back in the last week, or some of it for sure, especially in the long-term inflation break-evens. So given the oversold nature there, I think you're going to get a bounce, but I think it's kind of a temporary bounce. It's going to take a while to repair the damage there.